Hi, welcome to Main Street Macro. I'm Neela Richardson. If you've been following the markets lately, you've seen that there's been a bumpy ride for stock prices. So, on today's Main Street Macro, we are going to talk about what's driving Wall Street these days as we look at it from Main Street. Here are three things you need to know. One, markets are future oriented. A claim on a stock is basically a ownership stake in the future earnings of the firm. And so markets really are looking long term when they try to price stocks. And while stocks prices are really driven by supply and demand, there's other things, like a whole host of things that can affect a stock price, namely market sentiment. Because when there's a lot of uncertainty about the future, a stock price can also represent investors' pessimism or optimism about what's ahead. The second thing that drives stock prices is the economy. Stocks and the economy move together, but not in lockstep. It's almost like me when I walk my dog Lavender. I'm always setting the direction of where we want to go. I more or less set the pace. But even though I'm walking in a straight line, Lavender is walking everywhere. She's smelling this flower. She may be digging up dirt over here. Or, oh my goodness, if she sees a ball in the distance, she's going to run and run after it. Sometimes she even runs behind me. Well, that's kind of like what the stock market does with the economy. Though the economy is always setting the pace, sometimes the stock market runs ahead and sometimes it runs behind, sometimes it even goes sideways. The third thing you should know about stocks that's really important right now is that stocks don't always have the reactions we expect. In fact, in this really high inflation environment we're in now, stocks can go up and down on good news or bad news. Stocks can actually go down on good news. We actually saw that happen last week. We got two really good reports, one from the jobs market and one from manufacturing. And instead of cheering what looked like to be good news about the economy, the stock market actually fell because they were worried about what that meant for inflation. If the economy is too good, the idea is that prices will keep going up instead of down. And that's bad news for a market based on the future. So while stock prices can move for a whole lot of reasons, remember it's just this one thing, and this is important for a Main Street audience. It's really about the real economy. The stock market is not the economy, Main Street is. And ultimately, Main Street decides the stock market's future. Thanks for watching the Main Street Macro. For more information on the week ahead, please go to adpri.org.